Hello, everyone. Thank you for joining me today for our November recap. November was an interesting month. It gave us a little bit of movement. There was definitely a modest pullback early in the month, but by the end of it, the major indexes more or less held their ground. Um, if we are on an airplane and I am your flight attendant, I'm still walking around serving drinks, even though it felt a little bit bumpy. Nothing really was going on that was too dramatic for the month of November. The tech-heavy Nasdaq slipped a bit, which is not surprising, with interest rates staying elevated and some reevaluation about the big tech AI hype. Those names kind of took a breather for the month. Talk about that a little bit more later. But for most of you, the mix that we have worked. You're not overly exposed to one area or another. And luckily, nobody really seemed to panic. Maybe it's because we have a busy month when the holidays are around, but that's good. This is how we build wealth for the long run. So, for interest rate updates, the 10-year Treasury settled around 4%, calmer than some of the volatility we had earlier in the year. And that stability is helpful for bonds and still helpful for cash and income-oriented strategies. So that's kind of a positive backdrop for the parts of the portfolio that aim for income or lower volatility. In other markets, there was some pressure on commodities, oil and other commodity-linked inputs. They kind of drived a little lower in December. That tends to ease inflation pressures, which is one of the reasons why inflation seems to be on a gradual path downward. That does in turn support consumer spending and investor confidence, which is overall a good thing. And then when it comes to growth, it's still slowing, but it's still above water. The services, like the service sectors that we're seeing, like restaurants, healthcare, travel, they continue to show activity. And I can see that too with the financial plans and the spending. Like people are still shopping, they're still traveling, they're still eating at restaurants. All of those things are still happening. Um, Manufacturing and other industrial sectors were a little bit softer, but that's not a big shock. That's been the case for a while. What matters is that the economy didn't collapse. It's just kind of cooling off a little bit, which is what we need to have a soft landing. Um, if you are looking for work right now, employment and inflation, it's slowly normalizing, but job growth does appear to be slowing. Some private sector data showed that there were job losses in November, and that's not great news for my job hunters out there. And on a macro level for inflation policies for interest rates and future stability, this is part of the process. Inflation does continue its gradual deceleration, and we did have some government reporting delays earlier in this fall. Which makes the numbers a little bit tricky, but the trend does seem to remain downward. That's giving the central bank some breathing room to think about cutting rates again. Um, Another thing I wanted to talk about it was Black Friday. I don't know about you, but if I got one more email telling me about some limited deal or offer that I was going to miss out on, I was about to throw my phone outside of the window. Um, Black Friday, it's an interesting time. I remember it like fondly, like when I think about like, and I've seen some videos about the way it was in like the 80s. And my mom, who's not a aggressive woman at all, like somehow in the early 80s came home with two Cabbage Patch dolls. I mean, it was just a different experience than the Black Friday of today, which tends to start like the whole month of November. And then the deals, you're seeing them like all month long. And then there's Small Business Saturday, Cyber Monday, Travel Tuesday, all of these things. It kind of to me just feels like marketing, like the deals are not really that great or they're kind of inflated from what normal prices are. But anyway, US sales on Black Friday this year hit a record high. And some of the figures are showing of $11.8 billion, dollars, which is up 9% from 2024. Um, Online boom was helped by the use of AI-powered shopping tools like price comparison tools and chatbots, which make it easier for shoppers to find the deals and compare them online, which is a little bit interesting. That's new. And in-store traffic, though, was weaker. Early data shows that foot traffic was down compared to last year, with fewer people heading to malls and brick and mortar stores. This pattern seems to show that shoppers are selective by what they spend and are maybe buying fewer items, but spending more per purchase, likely due to higher price tags on things. So, if you missed out on your Black Friday deals or if you got all your shopping done, congratulations. What I would like to remind people to do, and this is something that I do when I spend, I think about what I want to buy for somebody first. I I know it's very difficult to like scroll through your phone and you think, oh, that would be great for this person. That would be great for him, her, with children, parent, anything. Um, Try to be intentional about it and then go find the best price and go find the deal. Because if we are just kind of reactive when it comes to shopping, one thing is we'll definitely overspend. Another thing is we might not realize what we bought for those difficult people to shop for because it's so easy to spend money on certain other people. I know my sister, for one, is the easiest person to shop for. And then I might say, oh, what did I get for my son? And so be intentional about it. Set constraints. And also, like, try not to get caught up in the whole commercial part of it. Experiences are great. If you can shop small, that's amazing. It really does, like, buying at a local business or buying a service or something like that. That is putting food on their table. So if you can, try to shop small and support those local businesses in our communities. But yeah, the strong online sales show that people want to spend money, and that supports retail earnings and those commercial sectors. But yes, so all right, back to other important topics on the finance side. So for the Fed, their year-end decision, I mentioned this in the last meeting that the idea that the Fed was definitely going to cut rates in December kind of got um, shaken a little bit by Jerome Powell's tone during the meeting. And I thought he might be pumping the brakes on people's expectation of all these cuts. And I think that's true. I do think that it's very possible that we will get a rate cut in December. They cut in October. And based on the numbers and the data cooling, I think that interest rates may still come down in December. The odds went from like 100% to 40%. Now they're back up. So I think that could be likely, and that's going to support long-term growth. But over the short term, the markets might wobble. Again, like they did last month when it was priced in and then it was a no, and the stock market responds. It's definitely not time to panic with this. We might be making we made some changes already in the bond holdings and things like that. You might see that if you see trade confirms, that is me making some shifts there into what I think will be performing better if those super short interest rates are not as good as 1 to 3 years out, or maybe a little bit longer. But it's definitely just it's good to know, especially for lenders, if you're somebody who's been looking at refinancing your mortgage, if you're somebody who's been thinking about making a big purchase. It does look like we are still on track for interest rate cuts and potentially more in 26. Um, because there were delays earlier this fall with the government shutdown and reporting, we might see a lot of new economic data come out in December. And so that could be inflation numbers, jobs, retail sales, all of those things. And the market might respond sharply up or down because of this. But remember that those responses are short-lived and that data tends to be processed much quicker lately. And then we might see a change the next day. So if you see noise, you see volatility, just, know you can reach out, but also like this might be a direct response. There might be a correlation to why it's happening. And it might be like, oh yeah, we just got updated job numbers. And this is what happened. So, um, all right. So with a strong Black Friday behind us and a strong eye on the holidays and seeing how things go, I do think that we're seeing like some strong signals going into 2026 and how that might, work out for next year when it comes to our financial planning and the portfolio. If online sales stay strong, we can expect some sectors like consumer goods, retail, and discretionary to stay in focus. So we'll kind of, look at some of those companies there. It's also year end is a good time to do a little bit of housekeeping. So, if you see trade confirms and things like that, that's me. There are some times at the year end where we can look at any underperforming positions. There's not many of them right now from this year or from the past couple of years, but there might be some where we can sell those, harvest the tax losses, and move that into something that will be performing that we think will be performing better. So that could be something we do. If you're managing your own investments, you might want to look at some of those losses that you have to see if you might want to do some of the same so you can use some of those losses to offset gains or income. And if you're looking at making charitable distributions, contributing to an IRA, all of those things, you can look at doing that before year end. Also, if you have FSAs, flexible spending accounts, you may have to use those dollars by year end. Some give you until March, but check your plan. Get your glasses, get your get your contacts. Um, do what you have to do to make sure that you take advantage of that money. The FSA is important because that doesn't carry over. So I think there's some things that we'll continue to look at as far as tech and AI. I know I've talked to a couple people about that bubble. Tech still remains kind of hot, but that enthusiasm might be pulled back a bit. Bitcoin is still bouncing around with a very small percentage of holdings in there. Sometimes that might be a long range outlook, so we can expect some volatility in that area. But this is not a get rich quick kind of plan. I think we need to make sure that we're not over concentrated in anything. We need to have, diversification, balance, and discipline. So hope that everybody has a happy holiday season. And if anything's changed in your personal life, your goals shifted, your needs changed, reach out. That's why we're here. We're going to definitely be reaching out to people in Q1 of 26 to get annual meetings set up on the calendar. And I'm also going to be looking at making some changes as far as what you might want more of, maybe better, performance reporting, more communications out to you, just things that just to make sure that you feel like you have the visibility into your accounts that you need, that you feel comfortable, that you know what's going on. And so, yeah, if there's anything that you'd love to see more of in 2026, reach out to me. I'd love to hear it and see if I can help continue to just get the firm, moving along and make things better and better for you. So I hope you have a peaceful holiday season. Thank you for watching, and I will talk with you soon.